Hello traders, Damien here. I thought it might be easier to answer this question in a short video, as it will probably help most of you. One of the things that I've been seeing, even though you guys have been doing an amazing job of reading the order flow, is perhaps getting a little bit of tunnel vision and trading the expectation despite what price is telling you from a standpoint of order flow. Okay, so in this particular situation, we have a couple of expectations, and I'll get to those when we get to the chart. Okay, so we have here, it says enter short after the close of the bar are circled with an expectation of a new structure low. He's talking about this area right here. Okay, while the previous bar was a really good rotation bar, I wanted to see price get back into an area of structure in case the bulls reacted off of it. Got stopped out for almost a full position. Okay, so he's talking about entering here as he circled. He also talked about getting stopped out here at a full position. Okay, so number one, there's a couple of things that I see problematic with your trade, and then I'll go into detail with other things that you should have been aware of. Okay, one is you enter down here, okay, which is extremely late, making your risk reward affecting your risk reward substantially. Okay, I don't know if this is when you got to your computer here. I don't know why you didn't enter here, or what the reasons were for you entering here, other than you said you wanted to see price get back into an area of structure. Okay, so price did get back into an area of structure here, but you didn't take action until down here. Okay, so that's an issue. Two, your stop placement was also an issue. Although your stop was above the lower high swing, it's still an area of vulnerability, because if this is the main swing, your stop will be better placed up here. Now I understand risk reward, right? You entered very late, okay, and that adversely affect your risk reward, as you needed to understand the dynamics of what was happening here a little further to help you understand that in this particular situation, you were better off passing on the trade altogether or managing your trade with more latitude. Okay, and I'll go into all that in greater detail when I get into my chart. Okay, but my response was, okay, please remember to assess the order flow. The expectation is what we trade, but the case building is critically important as well. This is another case of neglecting the order flow, what the order flow is telling you. Momentum and volume came in strong on the correction. It was also way deeper than expected. Be careful when you see this. When you see something like this occurring, I put my patience jacket on and expect a complex correction of some kind. Okay, I then would like to see, at the very least, a strong attempt to test a low about a 161.8 or better. Okay, then I like to see a complex correction to the upside, with the second leg being weaker than the first. I hope this helps. Picking up on the clues the price gives you. Pick up on the clues the price is giving you. I'm sorry. Build a solid case and understand your trade from structure to order flow analysis. One of the things that I forgot to mention here, I don't know why I did that, must have been tired, was that we had a pattern completion and a symmetrical pattern completion. So that alone gives you an expectation of a deeper than expected move. Okay, we'll go into that when we get to my chart as well. But I wanted to highlight your chart a little bigger so everyone can see that you're talking about entering here, okay, and being stopped out up here. Okay, your stop was here when it should have been above this swing. Okay, expectations play out 70% of the time or better, so we have to give our trade the benefit of the doubt, hold the price action accountable, and put our stops in the appropriate place. Okay, if the risk is too big, considering your risk reward profile, or the risk is just too big and it's going to over leverage your account, then you only have two choices: either bring down your position size and enter with a smaller position size, or not take the trade. Okay, we definitely don't want you to over leverage your account. We don't want you to take unnecessary excess risk. Okay, but you also need to understand the dynamics of what's happening here. So I'm going to scale out of this, and this is the exact same chart. This is the euro dollar futures, okay, 1 minute interval, same thing, same chart as you can see. Okay, you entered right at the close of this candle here. I'll bring it in side by side so you can see it. Okay, this here is this, and this here is this, and this is where you entered. You entered here. You entered here, and you got stopped out. Looks like a couple of points above the swing, right at the close of this candle right here. You got stopped out at the top of this candle right here. Okay, so this was your entry, this was your stop out. Okay, so now we can get to work here. Number one, what do you have here? Let's say you get to the computer and you're considering entering prices here. I don't know where you got in, and that's not important. The important part is that you got in here. So what was happening in the order flow, and what was the expectation that should have had you cautious about, one, entering here, or and two, just wanting to get short anyway at such a low level, okay, increasing your risk substantially. Okay, one, we have a very clear, very defined clear high, clear low, followed by a correction. We will project this forward, and we have a symmetrical one-to-one completion. Okay, now you could have used this, okay, but the clearest high is right here and the clearest low is right here, and I like to work off of clear highs and clear lows. So we had a symmetrical one-to-one completion. Yes, the basic expectation from this great momentum and projection was for a shallow correction. Now, the fact that you got a pattern completion that was symmetrical should have had you thinking deeper than expected correction. If I was trading this long, I would expect price to get to the 61.8 of the pattern. Let me draw that out, see where that comes into play. Okay, boom. All right, but we'll address that later. Okay, so we have good momentum and projection to the downside. Our basic expectation from here, we have two expectations. One is for a shallow correction based on strictly order flow. The fact that we have a symmetrical pattern completion tells us that we should expect what? If we were trading this, this will be the break even, and this will be the profit target. Now, the fact that the order flow is strong to the downside and we have a pattern completion should tell you that any move to the upside is going to be, or should be, ragged and problematic. Why? Because the strength is now showing acceleration and volume and strength to the downside. Okay, with very little effort by the bulls, or very little capability to correct. Okay, now once this pattern completed and price found support at this level, we don't care what the history says here. We don't care what structural level is here. Let's just pretend that let's just look at this isolated situation. Okay, we have a very quick, very strong, equal volume move back up. Okay, this tells you what? Will, intent, and capability to what? To buy against what? Overwhelming strength. It takes a lot more strength to do this here and now than it did to do this coming down. Okay, so that alone tells you what? Very deep correction. I should have expected a shallow one. I have a pattern completion, so from the pattern standpoint, I expect something deeper into the 61.8 of here. I should expect at the very least an attempt to trade to the low. Okay, so I'm interested to see how that looks like. Okay, and then I would expect the price to make some sort of a complex correction or another attempt to trade higher, because I also have a pattern. Okay, now if I am going to get short, this is my best option right here. One, it's very deep. A one-to-one completion usually puts price in a symmetrical pattern near the high, okay, of C. Okay, so this is A, B, C. So in a symmetrical pattern, okay, a one-to-one completion puts price somewhere near the area of C. Okay, and keeping your stop above that keeps you in a better risk reward and safe territory. Okay, it's when the patterns are asymmetrical and B extends past or falls short of that things become a little more complicated. But in symmetrical patterns, it's pretty clear and cut. Okay, so entering here at the first rotation in the area of structure, okay, gives you a fair risk-reward profile, okay, and an opportunity to participate in this situation, okay, giving you the best of both worlds. You understand you may be entering early. The 618 is not that far away. Your stop will go above that anyway. You expect the pattern completion to get there, okay, so that's an acceptable entry here, not down here, okay, and putting your stop here was just a very vulnerable thing, but I understand. I understand the reasons why you did it was the risk factor. Okay, at any rate, okay, what did I say? I said I would expect price to try to make a test of the lows. Okay, in a healthy flowing market to the downside, we would expect here to see what? To counter this, we would expect to see volume, which we had. Price dried out, but I like to see typically price get to at least a 618 of this swing. This tells me what? That the buyers, that the sellers here are still strong enough and capable to take price down. So price got past the 618. I would have preferred even greater, the 78.6, but at least they hit the 618. That tells me that there's still health, that there is still strength here. Okay, we saw volume, okay, but it was just a little too much to undo what the bulls did here. Okay, they actually were able to not only consume but accumulate slightly over. This causes issues, and the bears have to get their act together and kind of not start from scratch, but work on reducing this will intent and accumulation that occurred here. Okay, so I also said that I like to see that, and I also like to see a one-to-one completion to the upside. Okay, so if I draw that out, we see that price came precisely within a couple of points of that area. Basically touched to 161.8 of the pattern. This would have been the ideal area to look for the short, and if you didn't feel the confidence to get here, you could have done it here. Anywhere in this area would have been fine. Okay, but getting in here initially to not lose out on the opportunity would have provided acceptable risk reward as long as you understood the dynamics that you were trading off of a potential pattern completion. The price could reach deeper price action and know where your stop loss should be. Okay, now did the overall expectation play out of a new structure low? Yes, it did. Okay, now we're on a 1 minute chart, so you have to take this close with a grain of salt, and it only closed higher by a point or so, and it didn't clear the wick of the previous one, so you can consider this, by all intents and purposes, an area that was retested once, twice, 3 times with good volume coming down. Though we had good volumes going up, the buyers were unable to make a new structural high. This is also very telling, and price eventually followed to complete the expectation of a new structural low below here. Okay, so understand the dynamics, understand what the market is working towards. What is the situational awareness? You understood you had a one-to-one completion. You know that the way you trade this is that you enter down here. Break even is the 38% ratio of A to D, and the profit target is the 61.8 of A to D. Okay, you also knew that you had a basic expectation of a shallow correction because of the momentum and the projection, or a correction to an area of structure. Okay, you got that. Okay, so here you got the best of both worlds. You got a pullback to structure. The momentum was strong. I wouldn't have necessarily taken this trade, okay, knowing what I know about the dynamics in context of where I'm at in the volume going up here. Okay, so I would have been patient enough to see this out and look for an entry somewhere around here. Okay, kind of like the trade I took yesterday, and I'll go over the trades that I took today in the next video that I'm going to do here shortly. But this is why I wanted to point this out in a video, because it would help you guys. When you have a symmetrical pattern completion, expect some sort of a complex process back into the 61.8. Okay, It's not going to happen all the time, so you need to identify what does this look like. Okay, so if you see weakness coming up here, price struggling to climb off of the pattern completion, then you know that that's probably not going to be the case, and then you can find an entry somewhere in line with the first level of structure, usually being the 38%. Okay, it's a first level of structure usually. Okay, and then the second level of structure and third level will be somewhere between the 50 and the 61.8. But the expectations are clear. That's why we take profit at the 61.8, because once we have a pattern completion, the expectation, even though we expect the 61.8, still does not change. If it's symmetrical, still does not change the expectation at hand of a new structure low. We're just expecting a deep correction, 100% or close to level C of the pattern. I hope that's clear. I hope this video had value, and I just wanted to point that out for our friend who posted the question, and for all of you that have fallen victim to this situation, and there has been a couple of you in the last couple of days. Okay, but overall I see good trading, I see great progress, and I see you guys starting to incorporate the order flow analysis. Okay, but don't get that tunnel vision of looking for the expectation, looking at the first rotation and just entering. Okay, situational awareness and context. You have to take it into context. What is the expectation? What is happening from a strength and weakness standpoint? What is reasonable for price to do? Those are questions that you should know the answer to before you get into that trade, before you decide to pull that trigger. Okay, stay ahead of the game. Don't chase price. Don't chase candles. Okay, and you should fare out okay. Alright guys, I'm going to get on to the next video, and I will be posting both of them. Thank you very much.